Many Americans are not prepared for financial storm clouds which could be impending. Today, I read an article on Yahoo Finance written by Praz Subramanian titled, Rolex Prices Are Falling and Supplies Are Rising. According to the author, new data is showing that price declines in the second-hand or used market will continue. The author went on to reference Morgan Stanley, who shared a recent note to clients indicating that the watch chart's overall market index, which tracks a basket of 60 luxury Swatch watches across 10 brands in the second-hand market, fell for the ninth straight quarter in the second quarter ended June 30th. They believe the downward pressure on prices will continue throughout the year. Well, my friends, this is interesting information. This is one more bit of information that helps us gauge what is going on in the economy. Luxury watch prices in recent years have defied all logic. I visited a Rolex authorized dealer a couple of times in the past few years, and I thought it was crazy that they had no steel sports models. They had some two-tone and solid gold watches, but most of the display cases were empty. It's pretty hard to sell watches when you can't even show a customer what some of the new models look like. All they can do is provide you with a glossy booklet showcasing the different models that you can't get due to them being unavailable. You can go on a website like Chrono24, but some of these pre-owned watches have been incredibly marked up by the sellers. I'm sure some wealthy people who want to have a relatively new model on their wrist were willing to pay a premium and do that. It is going to be interesting to see what happens with luxury watch prices in the next few years. I think it's really going to all depend on what happens with the economy. I remember during the Great Financial Crisis hearing about pawn shops in affluent areas where people were selling their luxury watches to get money. A lot of people needed to raise cash for a variety of reasons. Maybe they were over-leveraged with the properties that they owned. Maybe it was due to margin calls. It's really hard to say. I do vividly remember luxury watches flooding the market. I wonder if it could all happen again at some point. What do you think? Share your thoughts in the comment section below. This next article also provides some insight into what may be happening in our country. I read this on Yahoo Finance, put out by the Miami Herald, and written by Rebecca San Juan, titled, Another Sign of Trouble. South Florida condo sales drop by double digits, report shows. According to the author, condo deals in Miami-Dade and Broward counties fell double digits in June, according to the latest real estate report, just as condo owners become increasingly strapped by rising homeowners association fees, aimed at meeting new legal requirements to maintain larger maintenance reserves after the Surfside condo collapse. The number of annual condo sales fell by 26.8% in June 2024 in Miami-Dade, to 865 deals from 1,181 deals in June 2023. This is all according to the latest breakdown of Florida new signed contracts compiled by the Elliman Report. Well, my friends, the tide appears to be turning in Florida. I have to wonder how long some sellers can hang on. Some may be in a position where they need to sell. They may only have so much money to cover their mortgage payments and HOA fees. Some may be hit with expensive special assessments before they can unload the properties. Not everyone has a property that is paid off. Some may not even have equity in these properties. Some may be in for a rude awakening depending on what happens next. The real estate market does not always go straight up in the short term. Over the long run, real estate has a great track record. I think this could prove to be a hard learning experience for some individuals. I haven't heard much about this in the mainstream media. Back in 2008, the cracks started to form, but then the dam broke and fear spread like wildfire. Greed is a powerful emotion. In recent years, some people have been very greedy when it comes to real estate. Fear can prove to be more powerful than greed. Let's see what happens. It may not be pretty, in my opinion. On the topic of real estate, this next story may interest you. This was on Yahoo Finance, put out by Go Banking Rates, and written by Sean Bryant, titled, 10 housing markets that will plummet in value over the next 5 years. Before I get started, did you hear the word that the author chose to use? He said plummet. He didn't say slow or decline. Plummet is a pretty strong word, and it seems ominous to me. The first city on the list is San Francisco, California. He provided an example of someone trying to sell a 2-bedroom condo that they bought for $1.25 million in 2019. It was for sale at $675,000 in April of 2024. Imagine having to take that much of a bath on a property. Then consider how much you will need to pay for real estate commissions, closing costs, and possible repairs after the inspection. The next city on this list is Austin, Texas, followed by New York City, Denver, Colorado, Miami, Florida, San Antonio, Texas, Seattle, Washington, Phoenix, Arizona, Los Angeles, California, and Sarasota, Florida. Good thing Sarasota Tim doesn't own any property in Sarasota, Florida. At least he is able to keep his interests mobile. I have to wonder what is going to happen in the real estate markets in these cities if our economy takes a turn for the worse. What is going to happen if we see a correction or crash in the stock market? We saw some dismal days this past week. That's nothing compared to what could happen. If people start seeing their wealth erode before their very eyes, some may need to unload properties. What about all of those people who decided they wanted to get rich, renting out properties on platforms like Airbnb? If our economy slows, fewer people may have disposable income to travel. If people watch their stock accounts drop significantly, they may be less likely to spend money on travel. Some investors depend on regular rental income in order for their business model to work. I'm sure some never considered the possibility that demand could slow dramatically in the future. What's going to happen if companies need to lay off human capital to remain profitable? Those workers may not be able to find new employment quickly and may have a difficult time making their mortgage payments. As many of you know, a lot of Americans don't have an emergency fund. Many live paycheck to paycheck. Even high earners often struggle to pay all of their bills each month. I'm afraid there are far too many people who have grown comfortable during good economic times. Some forgot how dark things can get and how quickly the tides can turn. I read another interesting article today. This one was on Yahoo Finance, put out by Business Insider, and written by Matthew Fox, titled, "The S&P 500 is incredibly dangerous. Why Warren Buffett's favorite valuation indicator is flashing a warning for stocks." According to the author, the Buffett indicator, which measures the total market cap of U.S. stocks relative to U.S. GDP, hit an all-time peak of 200% on Monday, surpassing the record high of 197% reached in November 2021. The author referenced a quote from Warren Buffett, which came from a 2001 Fortune article. Warren Buffett said, "If the ratio approaches 200% as it did in 1999 and a part of 2000, you are playing with fire." The author said, fast forward to 2024, and it appears investors are playing with fire. Well, my friends, today I've shared with you several stories that point to possible pain ahead for assets. This last story is just one more bit of evidence. Some of you might consider all of this to be doom and gloom. I'm sure some of you think the Dow will soon be at 50,000 and nothing can stop the bull. I'm sure some of you believe real estate will never decline in value because the market is hot in your area. Well, maybe you are right, but I'm starting to get concerned by what I am reading from a variety of different sources. I am afraid for those who are over-leveraged, and I am afraid for those who depend on paychecks to support their families. I truly worry that some Americans are ill-prepared for dark storm clouds. I hope that isn't you. What do you think about all this? Share your thoughts in the comment section below. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.